what happened over the past 18 months, it has been a lot of things that has happened. And, as you know, in March 11th was when the World Health Organization announced the whole pandemic. And not to sort of say every event that happened, but to just highlight some of the important things, right? March month was very big. Bank of Canada, they cut interest rates 3 times from 1.75 down to 0.25. And of course, oil prices, they dipped into negative pricing territories then. So you had two shocks in the markets. And subsequently, in subsequent months, there was a V-shaped recovery in the stock market. So you got some of the real estate guys, they jumped and played the stock market game. And, some have done well. I had some friends who made, a lot of money when the market rebounded 30%. But more importantly, for real estate this was April, May, and April and May of 2020, there was not much activities because when the whole pandemic happened, the whole COVID-19 happened, it was truly unprecedented. And no one knew what to do or what's going to happen the next week or the next coming months. And of course, the listing activities, it was pretty much next to none, or it was like a 50% drop in the real estate market. However, things actually reopened August last year. This was after the first lockdown. Things reopened. And then, of course, due to very low interest rates, low inventory, and pent-up demand, then it was like a real estate frenzy from the summer of last year. And it continued, I would say, from what I've seen, it continued up until actually the summer of this year. August month was a bit slow, right? When they, start warning we were in the very beginning of the fourth wave, but it still was crazy. This was right up until before June 1, when we had the mortgage stress test, which was, simply the Bank of Canada, the posted rate just increased to 5.25%, right? Because before pre-June 1 of this year, it was 4.79%. So basically, how the whole real estate market happened from summer of last year to this year, it continued to be very hot, as mentioned, right? Due to very low interest rates, low inventory, and pent-up demand. Now, you have probably also heard in the news with CMHC, right? Last year, July 1, they tried to tighten their mortgage rules with the 680 credit score, and then they clawed back this year, July 1, to the credit score being 600, to how the pre-pandemic policies was. Yep, to how the pre-pandemic policies was, because they lost some market share, right? They dropped from about 40-something% market share down to about 20-something%, and they lost the business to the other private insurers, such as Sagen, and I believe the other one is Canada Guarantee Mortgage. And of course, throughout, all of these events that happened in the past 18 months, when every time there was an announcement that we're in a second wave, third wave, or there was a lockdown or stay-at-home orders, yes, it did, affect real estate in the sense that, some buyers, didn't really go out there to look. Home buyers, first-time home buyers, and sort of stayed on the fence just to kind of see how things will play out. And of course, when things reopen, then they felt a bit more comfortable to, to kind of get in if they can, given they can get a mortgage approval. But the investors, they stayed, sharp, kept hunting for opportunities. And, some continued to play the flipping game, which was one of the things that was brought up in this whole elections this month. And it was just 2 days ago. Yes, the Liberals did win, but it was one of the things that was brought up because basically the entire government, they want affordability and they want stability in the economy. And all of the things, for the guests who have, came tonight, we, as investors, we try to provide more housing for people. And of course, yes, it is a business, you got to make a profit. But some of the policies which they mentioned in the elections, and I'll just jump right into it because it is important. So just to dive into what some of the things with the liberals, what they said, right, is they're going to build 1,000,004 homes in the next 4 years, 1.4 million, right? For me, I think, in my opinion, most of the things that was said, and some, or if not most, was already said, pre the election. It's a lot of promises, sounds all nice, but we got to look at the actions and see, what they really do. So there's anti-flipping tax. If you don't hold the property for at least a year, right, you could be taxed. That is just to discourage the flippers. And then there is the rent-to-own policy, which, just to kind of encourage a bit more renters to become first-time homeowners. And, what was also mentioned was a multi-generational renovation tax, which is a 15% tax credit up to 50,000, right? So, the government sees more multi-generational, meaning you got the children, the grandchildren, they're all living, or the grandparents all living in one household. You finish the basement, right? That's like an incentive. However, again, these policies are more designed for the ones who couldn't afford. They're looking to get in to the real estate game. Even they have touched on the shared equity mortgages, which was introduced in 2019, shifting it more to like an interest-free loan policy. So most of these things, it really, I see the same things happening over and over again. In 2015, 16, 17, when government made all these changes, they implemented the Fair Housing Plan, the 16 measures, the 15% foreign buyer taxes, all of those things, it really did create problems in the real estate. But we really and truly have a supply problem. And, trying to incentivize, the ones who can afford and all of these things, it's great when it comes to election time. And you have seen it, the campaigning running up to the elections of October 2019. And mid-August this year, Trudeau called it, for 36 days, and it went by very quickly. And then it turned out to be the very same results, right? In terms of the seats, he didn't get the majority, still remained minority. But with respect to real estate, we still have the real problem, which is a supply problem, right? When you create all these taxes for the developers, the the real estate developers, and then projects that that normally may take 3 years now take 5 years or longer, then it really creates that supply problem. And I think to really provide more of the housing to solve this issue is really to incentivize the developers and free up more land such that we can build more. And and it's not so much to tackle it from the demand side with the buyers. And of course, for the real estate agents, they wanted to end the whole blind bidding process, but it's not really a federal thing, it's more of a provincial thing. But if they do end the whole blind bidding process, that could, so with real estate agents, when you're making a bid on a property, you don't know what the next buyer is coming in at. But if you make it open and transparent, right, that could change things in some ways. It will be like an auction, basically. But would that really solve prices from not going up too high? So what I see for the remaining of this year, and of course going into next year, now prices will still continue to rise, right? Until when the government starts to intervene again, like they did in 2016, 2017, and 2017 and 2018, there was 5 interest rate hikes. Then those, when those policies become effective, right, things like that, then it will start to to cool things down. And coming into the second half of 2022, right, is when the government will start to increase interest rates. So I think in Q4 of 2022, right, they will do so because they are just looking at how the job situation is now. We're at about 80% of jobs recouped, right? At the beginning of the pandemic, March, April, 3 million jobs lost. So we're at about 2,500,000, and some more jobs added in recent months, right? In the recent past months. And also looking at the cases with the virus and seeing how the fourth wave turns out as we improve on the vaccines, and now there's vaccine passports in the system, right? In Ontario, it actually became effective today, September 22nd, and with the receipts of the vaccine passports, and the QR code would become effective on the 22nd of October. So all of these things at the same time, the government continues to print a lot of money. In the first half of this year, they tapered back to about $2 billion they're printing a week, right? From printing 3, 4, or 5 billion before. And all of this of course would have consequences, right, for inflation, which some of you have probably experienced already, with the prices rising in your food, your gas, and et cetera, et cetera. So so the real question is, right, so what do you do in despite of all of this stuff that is happening, right, as a real estate investor? And what I always say is, seasons will change. They will always change and the markets would always have volatility and cycles, but your principles should never change. And 5 principles, which I've reiterated before when it comes to real estate, or my 5 principles, it's 1, buy undervalued. 2, buy and hold over the long term is the best way to become wealthy. And 3, buy good properties in good location where there's strong demand and strong growth. And 4thly, buy 1 income property every year, at least be in the mindset, because that's how the super wealthy become very wealthy. It's by accumulating properties. And don't ever sell, because you're going to get dinged on the capital gain taxes. And 5thly, do not wait to buy real estate and wait. And what I mean by that, it's very powerful, right, with the power of compounding, because I can tell you, properties that I have bought, I've never sold, and I've held, right, over a 10-year period, and seeing the compounded returns, right, when buying a property for 167,000 and now it's 650 today. And these are right in the downtown core, well-selected locations, quality properties, right? And, some in the early years, this was before, as mentioned, I'm in the Hamilton, Ontario market, before the new GO station was built, and it opened and became operated in 2015, July 9th, 2015, right? These properties that was bought around $250,000, average duplexes around $750,000 now in Hamilton. So Hamilton, for those who may have some knowledge, and some of these things, as you mentioned in Kitchener-Waterloo, you guys have the LRT already. And there's lots of developments and good things happening on the east side in East Toronto, in Durham, Oshawa, on that side as well. You got more commercial properties, you guys got the casino there already. But I can speak in particular for Hamilton, right? In Hamilton, there's actually, as I've been telling some of like investors or clients, right, who are in the same business, there's like a second boom happening in Hamilton, right? As of July this year, we already surpassed the 1 billion in the building permits. And the last frontier, the waterfront, there's $142 million development that's happening. And they already started construction some this year, right? And that's about 1,500 condos. And the LRT, it is approved and it is moving ahead. They got the it's about 3.4 billion, right? Funding, right? 1.7 billion from the federal and 1.7 billion from the provincial. And they're going to start construction early to mid 2022, right? And as well as the GO train services, they're improving. And as of August 7th this year, it's frequent, hourly service. So meaning from Hamilton to Toronto. And that was because before it was only 2 times a day. So it was very limited. But of course now 7 days a week, all hours of the day. So no one got to go to Aldershot GO train station to take the train from there to Toronto. Now you can get it directly from Hamilton. And, that's a very good thing because the future of Hamilton, right, by 2050, the population will grow to about 800,000. So that's additional 300,000 from about 500,000. It's about 530 something, around there currently. And so it's additional about 10,000, 10,000 in people every year for the next 30 years. So we got a growing population here. And of course, that's good opportunity as a housing provider or a landlord, right? If I can buy the whole of Hamilton, I'll buy the whole of Hamilton, I can tell you. But, of course, where I'm at currently as, Tribe mentioned about the GPLP structure is, the way how the game has been getting now. So these are my thoughts of how things are today. Not everyone, as prices rise, and you have seen it, in different, parts of the world, China, Hong Kong, San Francisco, California, properties have gotten, really hot, very expensive. Surprisingly, Hamilton, was written in an article to be the third most unaffordable city in North America. Whether that's true or not, right? It's definitely in the top 5 of the hot and pricey markets in Canada. So when you mentioned about the GPLP structure, private equity Tribe, as prices rise, not everyone has 150,000, which is like a 20% down payment on a $750,000 million property. Not everyone has $150,000 to play with, right? And and then when you have a big real estate development company like Core Development Group, they have a $1 billion fund and they're going to buy over 4,000 single family rentals, right? Homes. That really, makes it more competitive for the small investors. And, so how can the small investors who are getting started buying the first rental, the second, third, fourth, right? There's only, how many times can you save up a 20% down payment of 150,000 or 100,000? So after the second or the third property, then what the small investors usually go and do is they go and try to find a joint venture partner who can qualify for the mortgage or a down payment, etc. And that's the game with, some of the small properties under 5 units, because the financing is based solely more on the individual, more so than the property. But when you get to the larger properties, more than 5 units, then the financing is more on the property itself, right? On the property itself. And of course, your experience, your track record, your for property management. And it's a different game and qualification rules when getting, financing for the larger properties. So one of the things what I thought of was, okay, how can you scale, right? How can you really scale? And yes, if both of you, Sam and Tribe, have been going out to these investment groups, you probably may have come across another one called Kakoili, right? It's a Chinese couple, they're very much in the multifamily investing space. And, They, have set up a wonderful GPLP structure, and they are very knowledgeable in that space. That is a smart thing to do. And, that's actually, I think that the going forward, a better way of investing to still provide access for some of the small investors to get that decent return on their capital, right? If, they can't buy, they don't have 150, 200,000, to buy another property. So in closing, right, my thoughts, for tonight is really invest and do not speculate, which is what you're seeing, some are doing today, right? And you probably heard the Evergrande, right, crisis, 300 billion, right? So that's on the news right now because they cannot repay their debts. But I do think the Chinese government will step in and help them to restructure, refinance their debts, right? So there wouldn't be like a really big, it wouldn't really impact the Chinese economy too much because, real estate is about 15 to 20% of their GDP. So I think they will step in, they, get a little help, but it's, it's an example to talk about when you over leverage or you borrow too much money. And when the tides go out, right, you see who is swimming naked and, who are in trouble when you borrow too much and you cannot repay your debts to the bank. So the speculators don't speculate, invest and invest over the long term. The next is really to follow truly wealthy and successful people, and you will become wealthy and successful, right? There are many out there, which I've mentioned to favor in the past 2 years. They have, formed all these groups and then became gurus. They wanted to teach real estate investing. But how many are actually truly and wealthy, right? How many can actually write, a big check and, and actually like that are really truly doing things. They're not really found in the real estate groups. Now, as mentioned in the beginning, which I told Favor, I really honestly don't have anything to sell. I don't do this, meetup all of the time, but it's really simply to, to share information, to, to meet others. But I'm not in the coaching business or seminar or workshop business. So the main message really follow the ones who are really truly wealthy and successful, and go where the money is. So I can tell you, right, for the next 10 years, I'm very committed to real estate because that is where the money is over the next 10 years. And of course, longer term goals is to invest in, other businesses, but of course, real estate, looking at where reading how about everything that's happening. And when you see some big companies like the Weston's family, Loblaws, when they bought Choice Properties, a few years ago for 4 point something billion, that was a long-term real estate play. And their focus is on retail and real estate. And some have, poured more money into industrial and residential, more so than office, right? And, and in other classes of real estate as well. So industrial and multifamily, it's more stable. And some of the pension companies, insurance companies, big companies, they have investing, large sums of money in these two types of real estate. So lastly, as I've said in the beginning, right, seasons will change, but principles should not change. Right? Seasons will change, but principles will not change. But always be prepared for when opportunity knocks, right? Because when preparation meets opportunity, that's what they call luck, but you'll be a very happy person.